All right. Well, looks like we had a little bit of selling, like a couple. Pretty flat day. Let's see what I'm looking at here. Um, just adding up the trades. Only 4 of them. Or I should say sells for 31.13. Didn't hit any longs today, or did we? Oh yeah, EGP. That was a DCA. So not a new position. But yeah, pretty uneventful day. But you will have those. Nothing to really worry about. It is what it is. But I take these. I was out walking the pups. I actually sold DSL on 2 of these accounts, so we'll put that down as a 2 times. There we go. The profit on the day for trades was 31.13. Remember, this is the size. This is based on the size of the account. These are small accounts. All right. So if you profit every day and you don't take any losses, your winning percentage goes way up. Right now we're on 270 days without a loss. All right, so let's take a look. Now EGP was the only buy today. That usually tells me the market's either flat or moving up. But let's take a look at these trades that occurred. WD was in the morning, so let's see DSL. Be on both accounts, which is nice. So we can do away with all our annotations on that one. So it's fresh. Remember, looking at this one, that's also a CEF, but like I said, we're trying to get that the 1 year's worth of dividends in a couple weeks versus a year. If it takes a couple months, no big deal. But we're just strategically placing ourselves in the best possible way with the least amount of risk. So what's the other one? SWK. It's not on this account. Let's look at another one. It's not on that one. DSL again. Looks like we can annotate that, remove that buy order, remove all of those. Almost the exact same trade. Probably was the exact same trade. Start to keep track. SWK. I probably need to look at that. That one still has one remaining. So let's just put, we know we're in the profit still, but we need to add an extra $1 to it now. So it's 182.43 is the average price. So 182.43. Looks like it didn't get annotated. We'll go 44 plus $1 for the trade. That'll make us even. Oh, 182.44 plus 183.44. We'll just go 45. Oh, wait a second. What did we close that one at? Yeah, we'd be over that right now. 2. Oh, plus 280. We'll go 186.24. Yeah, so you don't, it already got there, so maybe it'll get there again. We'll put a close order in on that. Close. At 186. What was it? 186 what? 6. We'll go 25. Simple. That way we don't lose any money. Remember, each trade costs you $1. So, I mean, you get that right here, but you lose $1 extra, right? So we don't want to lose that $1. Might sound like much, but if you stick to your rules, with $1 mistakes can add up to a lot if you don't pay attention to them. So, pay attention to them. Looks like we had a dividend coming up anyway, so that might cover the $1, see? I don't know when it is. What is it? Yeah, March 8th. So 6 days from now. So I'll take a chance on letting it go up. Or we get our $1 back in the dividend. We could probably close it out if it just stays even. There's so many different ways to do it if you're not in a rush to get out. But always be looking to take profit. If you're not looking to take profit, all you're doing is dependent on dividends. And if you're looking for home runs, I mean, you might get lucky, but you'd have to be really diversified or have a hell of a lot of money in one stock that you just totally lucked out on. I mean, it happens, but I'm not the luckiest guy in the world. Right. Other than that, let's take a look at the mosaic on this account. Let's see what it's showing us. Oh, looks like Lockheed Martin's making a move. What's overall market looking like? Yeah. Tech getting hammered. Come here, boy. Come here, boy. New pup's growing up right. He's listening. Come here. Get in your bed. Get in your bed. Get in your bed. Good boy. Lay down. Stay. Big whiner. Yeah. You got to be tuckered out after that walk. All right, so what are we looking at now? Let's go down through the list here and see where things sit. think we still have the rest of earnings this week. I'm not sure. Doesn't really matter. We do the same thing every day. I wasn't around to upload those, so I need to go back and see those. Which were they, DSO? Yeah. Shot of that, upload that for some other folks that don't come on here. DSO. So let me get the chart for SWK. Mm-hmm. So you came pretty close there. 1445, 1429. Mm-hmm. How did that move? 45 update. Sometimes that happens when you play around with your keyboard. It's like we picked that up last week. You can see the blue. I'll use this as a good example. Well, how did you know to buy it there? I didn't. The scanner told me to do it. All that work and effort and time that I put in to make a scan, and it gives me a probability of success that's beyond average. That's all you need to beat the market. I already talked about this. But nobody can prove it. You hear all the time, oh, if they inject money, the market's going to do this. Hey, if Bernanke stands on one foot and so calls him on this phone number, at this time of day, the market's going to do. I mean, come on. People have been predicting the market since the market's been around. You got to use common sense here. It's math. Simple math. The only way you can continue to play this game at a high level is understanding how to do it at a small level. This is what I'm trying to show people here. And people that pick up on it, you'll never have to worry about money again. Once you understand what's actually going on, you're saying, oh, you're just buying it when it's going up. I was like, I buy it when it's going up, I buy it when it's going down, I buy it when it's flat. It doesn't matter. You have to have rules. And if you don't stick by these rules, most people set up a list of rules. When the first trade goes bad, boom, they're out. They come up with a new set of rules. That's the number one common problem that everybody has in investing because they hate losing money. So what they do, they try to come up with a foolproof way to beat the market. You can't be afraid of holding positions. And the only way you can do that is your positions have to be infinitesimally smaller than your account size. So if you've got $10 million, yeah, your position's going to be quite a bit bigger than a $20 million or a $20,000 account. When you start getting up into the $500,000, $600,000, $700,000, $800,000 accounts, if you don't know how to manage those and you don't know how to manage risk, you can forget it. I don't care how much money you have, you'll never beat the market because it'll constantly take from you because your risk is too high. The people that are making money in the markets, these institutions, they understand this. They understand that they have to spread their money out. Hence, that's why you see so many mutual funds out there. Make your own mutual fund. That's all this is. The stock portfolio is a mutual fund. If you go and take all of these different stocks that I have in just these accounts that I'm showing you, it's so diversified, it would blow your mind. I mean, we've got a little everything in there. I'm sure there's some stuff missing in there, but I mean, you can't get everything in there all at the same time. You can try, but the more diversified you are, the less chance you have of losing because some sectors are working harder than the others, and when they tend to flip, then the money's going other places. But be under no illusion. If you're trading 1 share, 100 shares, 1,000 shares, you're not a player. People that are moving this market are playing with big money. Numbers that, they can't even fathom because it's all computer run. All you have to do is look at some time and sales. Let's look at this. This is $113 stock. Look at time and sales out here. I love to show this. It's like, okay, 2, 3. That's you and me, right? Small traders. 143 shares. I mean, just multiply it out, right? And you can get an idea who you're up against. 143 by 113.61, right? So they get $16,000 invested in this one stock. Now, we don't know what their strategy is. All we know is somebody made that trade. Here's another one for 300. Maybe that was the same guy. Like, look at all these trades that are coming in, right? 5, 7, 3. What are these people focusing on? I mean, if they're hitting 100, right, maybe their strategy is to go for, what did I say that was? So 143, so they got 16,000. We got 143 shares. Maybe they're just trying to go for a dollar profit. What's that going to come to? $143, right? But they're risking $16,000. I don't know the size of their account. I mean, we can guess, right? But if it's 1% of their account, then this has got to be what? Just add 99% to that. It's going to be in the 100 and, well, let's look at it this way. 1 million times 0.0, that's 0.5%. Half percent is 500,000, or that's 50%, I'm sorry. 1 million times 0.05. Okay, it's $50,000. So if they had $1 million, they're utilizing 0.25% or less of their account size. But that's not what most people do. What they're doing is they're buying 100 shares. See, because 100. Look at the most common one you see, 200, 100. Why? Because that's the default on most platforms. What people are doing, you know, if that's not an institution, 82, 18, 6, 9, 5, 6, 1, 2, 1. They're all different. These are all different traders. I can't tell you for sure who they are. We can look and see, you know, I don't know what condition F stands for. I have no idea. This thing moves so fast, people are trading this in and out, but you're talking pennies. 4 cents, 100 shares. How much, when did he buy it? We don't know. Some people might be trying to make $5 per trade, and they trade it multiple times per day. But are you willing to, you know, risk that? And then you got to hold it. If your account size is 34 and you're putting $16,000 or $13,000 into it at 100 shares, the chances of you making it are 50-50, right? But if it goes down that 50% that one time, guess what happens? You're just collecting dividends till it comes up and hits your target. Or what do? Most people, what they do is they take a loss. They take a loss because they have a built-in stop loss. They're saying, hey, I want to, you know, I don't want to lose any more than $100, so I'm going to go $1 below that. I buy it at 113.59, and I'm going to sell it at 112, or I'm going to do the 2-for-1, what everybody teaches me online. I'm going to go for the 200, so I'm going to go to 115, 115.69, and I'm going to sell it at 112. Well, what's it got a better chance of hitting? If it's $1 away or $2 away, has a better chance of hitting your stop than it does to the upside. This is why you have to go with smaller account sizes or smaller trade sizes. Here's one. Here's, you know, 1. You know, say 1. You buy 1 share, right? I don't know what his profit target is, believe 100. A lot of people buying 100 there. You get the idea. I mean, you have to understand what's happening to your account when you do these things. So you look here, most of these, look, 2, 6, 5, 4, 1. You know, here's 143, right? But look, it's $12. It's not $112, right? That's max shares. You get 30, 4, 5, 2, 2, 2. All you have to do is hit 1,000 of these, right? And these come up to, let's say $1 profit per, and you can figure it out from there what you're going to make per year just in trades. And the ones that don't hit, you're getting paid dividends. So not rocket science, but a lot of people overlook the power of not taking losses. I'm not telling anybody to, you know, buy something stupid and just sit on it until it goes out of business and buy one time. I'm saying there's more to it than just that. Companies that are paying dividends are more than likely going to be in business for a while. If they stop paying dividends, it gives you a chance to get out. But what if you're the unlucky lucky guy that comes in and says, hey, I'm gonna buy Coca-Cola today at $50. And you think, oh, well, I don't think it's going anywhere. And they have this massive lawsuit for, I don't know, high fructose corn syrup. And they, end up going out of business. So they stop paying dividends, but you put your whole portfolio amount, let's say $100,000, you buy as many shares as you could for 100,000, just like 2,000 shares. And you're like, oh, yeah, great. Company's out of business. Where's your 100,000? Ain't paying you any dividends. That stock's going all the way down. What you have at risk is that $100,000. Now, sure, you could sell it, but at what price? When are you going to get out? What's going to be your reason to get out? What's going to be your, what's your uncle point? When are you going to get out? Me? Hey, if it shows max shares at 8, that's the most I can. I'm just using this as an example. If it's 8 shares that I can own of Coke, I try to hit that dividend amount every year. And yeah, it's a little bit more work, but guess what? On a small size account, if it goes out of business, it's a small part of your account that doesn't affect you. It's just a blip on the radar. You don't have to worry about it. Your accounts are in the millions, you're going to have, it's not more risk, it's the same risk for the size of the portfolio. It's just a higher amount. That's what everybody's got to get in their head. When this market finally turns, if it ever turns, there's going to be a lot of hurt out there because there's a lot of people with a lot of money just sitting in there and they're not taking any profit. It's all unrealized. Well, we got about 3 minutes left. OPP. That is like the slowest mover in the portfolio. But I don't care. It's making me $2 a year on 30 shares. So what? 60 bucks on 420. It's 12.5%. Doesn't take a rocket scientist to figure it out. So I'm going to take you 6.5 years to double that 426. Multiply that by how many? I don't care if the market comes down. I don't. Yeah, some of these dividends might come down a bit. Who cares? Look at the value. Look at the yields. When these prices start to come down, these yields are going to explode. You're going to see dividend yield up here at the top. Its overall account right now, we're at all-time highs. It's paying 743. This is going to double. If the stock market was to go in half tomorrow, this is going to double. You're going to see 15% dividend yield. Not that that's what you're making, right? Depends how far down you are. But overall, the portfolio, based on price, based on the dividend amount, is going to come to a percentage. I don't know what it's going to be in the future. I'm just saying, if this cut in half the price, this goes up. If you double the price, this goes down. Just numbers. But yeah, honestly, I'd really love to see. I've been talking about it for a couple months. It's like should come down, but it doesn't. But I don't change my philosophy. Oh, it looks like this sucker's continuing on up. Check that out. Yeah, go on and hit that. I'll take that off the table. No matter. And I don't care if it stays on there. I'll still pull that 280 a year on that 180 bucks, which is 1.5%. Whatever. It's still better than the bank. Now this is a really small account. I like working these small accounts because it shows you the power. You start getting up into the big numbers. Most people don't, they're not trading $500,000 accounts. And all you're doing, it's a scaling issue at this point. You're doing 5 or 6 times the amount of shares. You're not going, hey, I'm going to go 100 shares because I've got more. You'd be at 30 shares here. So you see what's actually happening. If you follow me for any amount of time, you're going to figure out that this system works. But of course, everything changes too. So you have to be on your feet. You have to be always thinking, always watching. Looks like we got one pulling back here. That's okay. I still got a ways to go. I need to change this alert down here too. I'll put it right on the... All right, looks like the market's closed, but I'm going to finish this off while I'm on here. Get that alert on that third standard deviation or pivot point, just so it gives me a little bit of forewarning. Yep, so not too much else has changed in there. SCM. Yep, let's go back over and see how these ended up. Now, see, I don't really care about this one. This one's just it's a low. I'm like halfway down on it in this particular account. But like, I think it's max shares on there too. So CLM, SLVO. These are just, monthly dividend pairs that just keep rolling in the cash. And SLVO over the last year and a half has been crushing it on dividends. I mean, this has been paid for, I don't know how many times. It's been in this account for years. And it just stays in a range. And I mean, it's just like a bank account that just keeps on giving. What's the percentage on this? Let's go over to SLVO. Yeah, it's paying 28.9%. I mean, it takes 3 years to double that amount. If it continues to pay at this rate, $45.69. You're gonna make $4,500 in 3 years. I mean, just a numbers game. Look, I mean, I'm not lying. I'm just saying, if it stays the same, 354 multiplied by 191. That's what it says. This is what it says right here, 191, right? And I'm not even going to put the 2 on there. That comes to $676 a year in dividends off 4,500, right? So if we divide that by 45.67, right? Multiply that by 100. It's 14.8%, right? I'm sorry. It make 4. Let me back up here. It's 354 multiplied by 191 is 676. Should have done it the other way around. So 676.14. 670. 4, 5, 6, 7 divided by 676.14. 7 years. That's how long it'll take. 7 years. At that amount. But it's saying 28.9%. Think about it. What's okay? 45.67 times 45.67 times 28.9%. It's 13.19 is what it's supposed to be paying per year. They're blowing my phone up today. But you get the idea. Like from month to month, look at this. It's going to pay 4 cents the dividend amount. Now I want you to watch this if you watch it at all. Watch and see. When does it pay? March 18th. Watch and see if this amount is actually 4 cents. I'll bet you it's higher. All right, well, I got to do an Uber pickup for the missus, so she's got her arm in a sling. But that's it for today. I'll see you guys in the morning. Went a little bit over on that, but I wanted to get that point out clear. Do not, think that a small account can't make money. We're not adding any money to these accounts. This is for, training purposes. I want you to see these actually work. All of the accounts, you got one, I think one's down at 20, this one's at like 70. So trying to touch on a couple of different ranges so people get the idea so they're not overwhelmed. So this one's at 20, the cost basis is 21. There's total amount of like 26,000 in there. And then this other account, I think, is 34. Yeah, so 34,000, somewhere around there. And then the other one's 60. So it gives you a good idea. When you get over the 100,000 mark, then we start talking. There's not a heck of a lot of difference between what you're actually doing. It's just the amounts, which I had talked about before. Your position sizes will be larger, right? And it's all based on how much money that you have in your accounts. But if you're trying to trade a $20,000 account, like a $1 million account, you're going to wipe yourself out, and you're not going to like your returns. But that's it for today. If you got any questions, please leave them in the chat section, or you can email me at T1ReconWriter. You can get on, I'm on Twitter. I try to post as much as I can on Twitter. But other than that, we're pretty much done for today. Have a great day. Well, I need to post one other thing here before I get off. I need to change one thing. And that will make it complete.